The broadcast is now starting. All attendees are in listen-only mode.
All right, I just turned the mic on, realized I had the mic off for the last 2 minutes. Good morning, everybody. How are we doing today? Got Power 62 session for August 7th, 2019. My name's Todd Groskreutz. Welcome, Tony. Thanks for coming. Got a couple things to look at today, take your questions, and go from there. Again, here's our schedule. Make sure you're catching the sessions that you want to. Live is always better. Your questions help drive the session. That's the majority of the session. We are right here. And later today, we've got Clay Taylor doing another Waveology intermediate and advanced course. Does a great job with that, mixes in some wedges, good stuff. So had a full slate yesterday. Josh did a great pitchfork course or pitchfork session right here. Josh Casey was doing his Waveology, which he has a very good understanding of. Has some great charts that are marked up, gives you some good ideas. He's big on Retrace Extreme, the clay waste. So if you're interested in that, make sure you pick up the recording of that. And again, we got myself and Clay today, and then a full slate on Thursday. So good stuff, good stuff. was. So we just moved it back a little bit today. So let's get through this and then we will move on. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors or traders. There are no guarantees of profit, and most Forex traders lose money trading. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should only invest money that you can afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts or uncertainties. This presentation and all of its content, including past trades and potential trade setups, is for educational and informational purposes only. Using any strategies, techniques, or software mentioned in this presentation is also risky. We make no guarantees of profit of any kind. The presenter is not a licensed financial professional and therefore will not give any financial advice or recommendations. All information in this presentation is our opinion and may not reflect the truth or reality in the world of trading. Please use your own good judgment and seek advice from a qualified consultant before believing, accepting, or acting upon any information in this presentation. This is not a solicitation to invest. Hypothetical performance results may have many inherent limitations, some of which are described below. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of any specific trading program, which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. All right. If you don't have a screenshot yet of this, go ahead and take one, and then we'll move on. All right, the Power 62 toolbox. The picture on the left was me. You can't see her. That's the beach. My daughter does open water swimming 3 days a week, so she's out there training in the water. So I was doing some self-development while she was training yesterday morning. So it's rough, but I pushed through. All right, so what tools do we have in our Power 62 toolbox? Things we've covered, things that Steve's discussed, et cetera. When we're talking, that 62 EMA and the things we know around it, what are some of the things that you guys know that we have? Let's see if we can make a list here. So first one, the obvious one, right? 62 EMA, per time frame. Harmonic targets, yep, good one. Yep, the 38.2 Fibbo, we talked about that last week's session. 38.2, sometimes it's 0.5, but as we make that cross, trying to figure out where we're going to end. The 62 cross, yep, so the 5, crossing the 13, and then the 13 crossing the 62. which shows us the change, if you will, or sometimes I'll call it a turnover, kind of that, the change in direction or a trend is establishing. Got any other ones? How about the after the cross, the pass and check? So as price is coming down, comes back and checks. If this is the 62 coming through there, checks it and then takes off. So we've got that in our toolbox. Yeah, Taj, we'll more than likely look at that towards the end. Multi-time frame waveology, yes. Not specifically the 62, but we use the two in conjunction. They're very closely married. One is a reflection of the other. They go hand in hand. One doesn't exist without the other, put it that way. The fact that it has relevance on all time frames, absolutely. So it's fractal. We can overanalyze sometimes. We'll look at an example today, but as we go up in time frame, our waves are larger and larger. So the 1 minute's going to cross quite often, the 5 minute a little bit less. By the time you get to the 15-minute, your wave coming out of that cross it's a substantial move. There was one more I wanted to point out. What was it? Oh, shredder bands. Shredder bands. So they are wrapped around the 62, right? So it's given us another potential support and resistance. And again, those are fractal, so you can use them per time frame, or you can use the 30-minute ones. Shredder, yeah, actually it's shadow bands is the correct terminology. I think that makes a pretty good list there. And in all of these, the common thread in all of these is they're all Fibbo related. The 62 basically being a .618 Fibbo value that it keeps coming back to, but these are all, when you pass and check, if you pull a Fibbo, it's going to be a Fibbo value 9 times out of 10 or higher. This is a Fibbo. The targets are based on Fibbo off the 62. So keep that in mind. Everything's Fibonacci on the charts. So that's a pretty good list there. We've covered most of them, if not all of them. Do you guys have any right now? Did you guys bring any questions? Do you have any questions? No questions. Well, it might be a short session. Now we're getting a few in. That's a clay move there I just used. Okay, Taj, yes. Spencer with a question. I'd like to see the specific relationship of the 513 on different time frames. I have an example here today that will see that. So, and it works about the same on, again, fractal, right? So it's going to do the same thing on every time frame. It just when you get to the smaller charts, it's smaller moves. All right, let's ditch that. All right. So we go back to Toolbox. I asked this yesterday. How many of you have been through the wedge course and or are using wedges? Janelle, yeah, yes. All right, good to see. Good to see. Guys, and Tim Packus, who's been with Steve is on today with, he's been around a while, longer than any of us as far as Forex. You can spend time looking around on the charts, and this is, I'm not a business builder in e-economy, and I kind of poo-pooed a little bit right away, but when you look at the wedges that they're calling, probably 60% of them, and this is based on data, 60% of them will make just an absolute no-brainer trade. And you don't have to go looking for them. And they're good moves. Money management, there's different things you can do, but getting 10 pips off of one is not hard. And we're going to look at a setup today with the 62 technology that kind of helps us even more. So I think the biggest thing on the wedges is getting your RAS tuned to draw them, but we don't need to overthink them, and that comes with time. I think the biggest thing is generally, if we look here, let me grab my pen, it's the wedge is a retracement in more cases than not. Where we pulled down here, we came up. This one kind of was more of a descending before it actually broke out. We came down here, we pulled up. Now I like this one's a little bit backwards, and I like, when this is the retrace extreme and we're coming back to the 4 hour, but the 4 hour is kind of moving out here, cycling down, which is fine. Because when I first started doing them, I was getting frustrated I'm like, oh, which way is this thing going to break? Is it going to break up? The odds are, we had a strong move down here. This was a high from last week's movement. Had a strong move down, retrace. We're generally looking for move down 64% of the time. And so I started looking real close at how the EMA works with it, or the EMAs on time period. And what I started to see is that the good ones, whether in there, again, the statistics play out that 65% of the time it's going to break in the same direction. But if we look at the 15-minute cross and the 5-minute cross, that more often than not, the good ones, the EMAs are going to tell us where it's crossing. And then, of course, we can use our waveology to work with that also. So if we look here, the yellow line represents where we were alerted to a wedge. Now, we can draw wedges by ourselves, but I like to try to make it as easy as possible and not really have wedge comes up, I draw it, I put a line on it. I can see here that I've already, by this point on this one, I've already crossed here. Sometimes we haven't. And so I'm looking to move down so I can put an alert. I can draw a wedge, I can put an alert on this line if I want. If, let's say, I'm going to trade the break, as opposed to trading this point right here, more so here because we got in a little, we're just getting the alert. So at that point, I got an alert. It took me all of 30 seconds to draw this line and put an alert on it. I'm done. I can go do something else until I get another alert. Test, test. Spencer's not hearing me. Are other people hearing me? Okay. And occasionally I get just a little bit of fluctuation in my bandwidth, I think. That happens to Steve on occasion too. So what we, using our 62 technology, we see that we were kind of wandering around here. The 5 came down, and right here, the 5 came up in this retrace, or this pull up. It crosses the 13, which is the yellow, and then the 13 crosses the 62 EMA, which is our orange. We came down, came back, checked it right off the bat, came down again, came back, checked it again, or real close. Actually, if we go over here, it was checking the 5 minute. And so we've got our cross. We've already came and done, and we're doing a pass and check, and we're just now getting the alert. So we've got 2 confirmations in that, hey, there's a pretty strong trend setting up, or potentially a good trend setting up. Now, if we go and we look at it on the 5 minute, so I like to use the 15 and the 5 for this. The 1's too short, but on the 5, we see that it came up, didn't really make a cross, but it hit it, came through, 5 crossed, it all basically happened at the same point. Again, we came down, almost made a pass and check, but here we checked. And a lot of times what you'll see is the 15 will pass and check, and then the 5 will. It's almost like, goes down in order. And then this is a lot of times that last stepping point, right? So we got the alert here. And if we look at that point, we were in a 5 minute harmonic wave convergence. 30 it hadn't hit extreme yet. Again, blocky waves, right? Because it had reloaded at one point. But so there's a good chance, in the 4 hours cycling down, there's a good chance that, this is going to push down further. We've got the EMAs both in our favor. So this would be a qualified trade right here off the 5. And you could put, pitchfork trend line in here as well. So this would be a qualified trade here if we wanted. It's trader's choice. If you've watched the videos, the wedge course, two-day wedge course that Steve did, you can wait for the break here. This week, on one's news events aside, right? So not trading any news event. This week on ones that broke, I have not, and the EMAs were in order, I have not seen one that came up and went through this line before it went at least 10 pips. Past performance, not indicative of future results, right? For all trading claims, visit www.tradingdisclaimers.com. And of course, wedge size 15 pips or more at that point. But we can see here, 10 pip scale, again, to fit it on. So our break was only about 3 pips, and we're in a strong move. We've already done that, last fill up for gas, hitting the 5 here. So we're ready to go. This generally is going to be a burst move coming out of here. A little bit of a pullback. Just depends if sometimes it'll come back, check the 5 again. But when the EMAs are right, that move's going to happen very, very frequently. Tim said he took the 5 minute harmonic wave convergence. Yeah, I mean that's really if you're in tab 29 on a 1 minute chart, this is higher. Qualified sell into the buy there, if you're calling this a harmonic wave convergence. So either way, strong 5 minute there. And we know that we're checking the 5. We're ready to roll. So if we're building our toolkit here. If we took the wedge out of there, even if we're just looking at the 513.62, we get our cross, we come back, we pass and check. We're ready to go. So on top of that, let's say we add shadow bands on there. Now we look at this move and we see that the top of this pullback was the 34. And we came from outside of the 34, made it inside the 21 right here. So we know there's an 87% chance we're going to get to the 62. Thank you, Steve Greger, for doing that research and math. Doesn't mean from here we're going to go straight there, right? So we get a pullback. So we had a strong move, pullback to this point here. We're working our way down. We get a wedge alert. With this data, we're like, wow, we've got an 80% chance of getting to here, which is 111.89, and we're sitting 11 pips above that. So we know we got, again, Tim taking this trade right here, this trade right here, 87% chance he's going to there in at this point, fairly quick fashion, because you're getting in that gravity zone of 10 to 11 pips. And then let's layer one more thing on top of it. Again, guys, if you don't follow this, you'll get it over time. It's stacking probabilities, right, with the tools that we have. So now if we look, the top of this pullback was a 144 harmonic to the pip. Energy point, you didn't have to draw a trend line, didn't have to draw a pitchfork. Wouldn't hurt if you did. But the indicators, the Power 62 indicators that we have, and if we look, right after that is when the 5 crosses the 13, and then we cross the 62. So price came down, it was up in that 170 range, comes down, pulls back up. Now, those of you that have studied harmonic targets a little bit know that it's the 123, correct? Is actually a harmonic target. It doesn't show up, but Steve will trade it on occasion. This line right here, it happened to be priced when I took this screenshot, but the 123 harmonic was basically right here. It was like right here. So you can ignore this line. That just happened to be priced at the time. So the 123 was like right there. So essentially it came down, hit the target, came down, hit the 144, pulled down, hit the 123, then took off. So it's just stacking those probabilities, watching it build. And what's neat about the wedges is that it gives you time to watch these things happen and build its case for, like, hey, I'm just going to give up. I've crossed the 15, I've crossed the 5. And a lot of times, usually, the depends on where you are in the move. If you're trying to cross the 15, the 5 is usually going to cross first, and then the 15 will follow behind. Or if you're in a strong move, if the 15's already crossed, the 5 may have crossed back and then it has to come back over. But when you get both of these to line up, it's pretty powerful stuff. Definitely. And again, it's RAS. It's taking the time to watch how price interacts with them. Their potential support and resistance. But on time frame, we know that 62 is the middle of the road. Price is going to keep pulling back to it. When it bounces off of it, it can be, waves in line like like here, very strong interaction. Even here, just short. We came up just short here. Comes back, pulls up, divergent. Five's higher, price is lower. When would you have entered? I would have entered here. With this, considering that if I was brought to the charts right here, I would have seen this. I still would have been looking at it. I don't usually say, I'm going to enter right now. But when I see this pull down, comes back and tags it again, that basically, that's basically almost like a 1-2, if you will. Those two, 99.9% pullback. Five's starting to pull out. So I would be looking to get in right here. The other way is, like I said, it's to wait for a break without a huge candle. But per wedge training, I would use the 15-minute break and then go from there. The only downside to be looking out for right here is when you come out here at 92 or whatever, is there is potential to bounce off of the 62 there. So that's why it's nice getting in here knowing, hey, I got 10 pips to the 62. Pretty clear sailing right there in most cases. Yeah, exactly, Tim. Lower high. So came from the high here, lower high here, lower high here. Is making its way down. Boom, boom, boom. I wouldn't say package my golden rule, but when they happen, especially after, we know price is going to come back to the 62. Eventually it came all the way down and found its way back. But when you get the cross, this side, when price pulled up past here, didn't quite cross, but obviously it was a strong pullback. I count that as a cross, when it's touching each other. So you come down, whether it be this one or these two, that's basically the same move. When it comes back to it, that first pass and check, usually you'll get a good move out of there. And you want to confirm that with your waves, right? 30s, sitting down there at 20, and you've got a 5 at the opposite extreme. So you know that 30 is just down there saying, hey, 5, come on down. It's fun down here. And the 5's like, well, I'm way up here. I don't know what to do. And then they say, I'll just jump. And they go, price just goes like that. So sorry about that. I had a little too much coffee this morning. So it's good stuff, good stuff. And it will scare you with consistency on when you watch it, how you see. So this is a wedge that was called last night. Here's one where, and again, there's a little bit of, people are going to draw the wedge differently. Again, the advantage of, when it was called, you're probably right here because you want to connect 2 points. Price pulled up a little bit past that. Again, this is one where, usually I'm looking for it, to be down here and come back up, right? Because I'd like to trade back into that 4 hour, but the 4 hour is kind of, wobbling its way down. It's kind of a weird pattern, actually. But if we look here, it's one where price was pretty strong. It was opening up a little bit. It's like, okay, we're going to turn over. So when we get the call, we draw the wedge. We don't have the cross yet on the 15-minute. If we look, our 5 is right here. It crossed the 13, so that's showing us some strength in the move, right? So if we go over, but if we go over to the 5-minute, we're getting the cross right at the break. So this one's a little bit earlier than, I'd rather see, boom. I'd rather see it like that. Where by the time it's breaking, we've already got the cross. 5 is crossed. This time we crossed, it didn't come down and pass and check yet, which also shows that it's making a fairly strong move there. And the 30 minutes snaking. But even so, here, if we look, by the time we break, if we wait for this candle right here at 12:04, we're sitting on the bottom. 15-minute slid in before the 30, I happen to have the 1 hour here as well. So we know we might get a little bit of cycling, and more often than not, it's going to keep rolling down. Comes back, bumps off the 15, and away it goes. Basically pulls that cross with it as it's going down. So if you're getting the trade alerts or you're drawing your own wedges, keep an eye out for how the 62 EMA and that cross usually is coming out of the bottom of it. Good question, John. Is this one where the trend was up but it went down? Yeah, I mean, so we had a long-term trend here, or longer-term trend here, right? And then it's pulling down. So when you get to this point right here, and then you're coming up, you never. This is a tricky point, right? Because you don't know. Okay, are we going to make a 3? 1, 2, 3, or an ABC, or was this the end? We're going to breathe a little bit and go back up after a big run like this. So a little bit trickier point in these moves. But I will tell you, if you do let the EMAs cross, so this may not have been the best example, although we had the 5-minute cross. If you let the EMAs cross, the continuing, it's telling you what the trend is, put it that way. So it gives you a little more flexibility or advanced knowledge, if you will, as far as saying, okay, like this, let's say we had a wedge here, right? After a pull down like that, we're not looking to shoot it right back up. Although, 30-minute was extreme and 4 hours almost extreme. But here I'm looking to continue. And if we look at a good example, 13 crossed to 62. By the time it came out of the bottom of it, we were crossed, came back, checked it, and away you went. Checked here, almost checked there. And the 5-minute would have been in your favor also. I think this might have been an alert more like in that spot right there, if I remember right. The wedge was like that. So it's watching and letting it play out. Again, this one's a little bit premature. Essentially, you're using the 5 here. The 15-minute move could have came down to here, bounced off the 62, or made the 32 and went back up, or the 30-minute, I'm sorry. So again, we don't try to predict price, but if we just let our EMAs say, hey, I'm crossed, I'm going to pull down a little bit, come back, and then, get in the back seat here. We're going for a ride. So it's like a roller coaster there. Come up that little hill and then down you go. So it's a little trickier to see here in, two examples, but watch it over time. It's pretty good stuff. Yeah, and these retraces, whether it be here, that's probably, like Tim pointed out, probably a 61.8 right there from this big move. And then you'll see them, in the shorter as well, from here to here. Put a fibble on it, see what you got. You're talking this move right here, Tim? 61.8. Whoops, all the way down to here and back. So, like I said earlier, these moves are going to be a fibbo value when they end. It has to be. Any questions? Any other questions? So it's powerful stuff. I started to really see the interaction with it late last week and been watching it this week, and it's crazy. It's just crazy when it goes back to having that patience where, really one of these trades a day is more than enough with the leverage, with the stop losses we're able to use. In textbook trades, there's 8 or 10 of them a day. In any one session, there's 2 or 3 or 4 that it just meets every criteria. You just keep going down the line, and you're like check, 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 check. And at that point, price is so committed. It's crossed here and it's crossed here, and it's like, okay, we need to make some type of move. And the EMAs start to widen out. We're going to make a move before we come back and check the 62 again. And that's where we make our pips. So. How do you save split screen charts? So this is a 2 up, right? So this is right here. You can look at 1 or 2 or 3. This is a 2, and then you just click the picture button, and then it asks you if you want to save as image. And so then you save it as an image, and then you have a picture of it. Or you can save the URL and pull that up, which they must have a billion URLs. All right, if we don't have any other questions, we'll wrap this up. So I hope that helped. Again, something to watch. No real quote unquote trade entry there unless you're looking at it bouncing off of a pass and check. But it's again, the 62s are giving you information on like, what is this trend? Where am I at? On the time period, 5 minute, 15 minute. Is the 5 minute 62 on your 5 minute chart, the purple one? Yes. So our color scheme has this being the 5 minute. I usually leave the 30 minute on all my charts just so I can see where I am in relation to the 30 minute. Taj, we'll touch on that next week on that 38-2 relationship. I'll actually do a chart for it. Hey, thanks. Yeah, and the personal development stuff, I know we all harp on it. The people that have been through it, and I don't think we can ever do too much, right? Um, Unless you're neglecting other things in your life because of it. But the the people that do it, and you start to see the changes, and I look back at even 6 months ago, and it's like, wow, it's that slight edge or compound effect where you just keep doing it and doing it and doing it, and all of a sudden you look back and you're like, that I was that person. I can't believe that I had those thought patterns, or my thought patterns now are so much more refined. And I think it's noticing if you're having doubts or negative self-talk, and being able to just stop that instantly, and being in the now all the time, and living in your present future in your mind, um, giving in to controlling things, and controlling other people and their actions, and just going with the flow, in a blissful state, with love, right? Where when you meet somebody, it's, hey, whatever you want to do, however you roll, I'm not here to judge that, but if there's some way I can help you, I'm more than willing to do that. So um, when you start to do that, where I live helps a lot. Costa Rica's pretty laid back. The locals are pretty cool. It's funny because we get people from the U.S. and Canada that come down here, and they want to impress their values and customs upon the local culture. And you can see it when it happens, and it's like, no, they didn't call you up to come down and jack their stuff up. They're all good. So, you're welcome to have your customs and culture, but you don't need to be changing other people. Go with the flow. So, uh, we can't change it. Yeah, you catch yourself with what you thought. You don't want to just say change to the thoughts you simply, but it will work. Yeah. Yeah. Go to Joe Dispenza's page today. What he had up there, let me pull it back up. It was absolutely profound. What, and if you really read it, I'll close with this. So let me put I'll put that up because that's so much fun. Let's see here. All right, let's bring this over. All right, this is it. Pull this up, take some time to digest it. But as we get towards the end, but the moment we start to feel frustrated, impatient, angry, or resentful, we've disconnected from the energy of our future. And more than likely, it's because we're trying to. So think about this in relation to your Forex journey. More than likely, it's because we're trying to force, control, predict, or manipulate outcomes. I need to make X pips a day. I need, which we shouldn't do, but I want to, get to here. So why does this happen? Because those emotions cause us to feel separate from our creation. So this goes back to being, a spiritual being with intellect, or an intelligence layer, and what we do with that manifests in a physical world. Because those emotions cause us to feel separate from our creation. Thus, we're not surrendering, allowing, and trusting in this greater mind. Belief. Instead, we're approaching creation as matter and trying to change matter rather than our energy organizing matter. If you're trying to control and predict when and how it should happen, then you're back in the known. That's because your prediction is more than likely you thinking about some known possibility from your memory of the past and trying to forecast that outcome into the future. I mean, that's probably the fifth time I read this already. That's good stuff. Read the whole thing, the whole setup on it, and if you followed Joe Dispenza before, in any time at all, obviously it mixes right in with his other stuff. But going back to why I said visualization is so important. Like after these sessions, I usually do a 45-minute meditation, one of his guided meditations, and seeing that future and then saying, being grateful for the tools that we have and for the opportunity that we have and the knowledge that we have, and then visualizing that future, and then just saying, hey, this is how I'm going to get there, and visualizing that, it just draws it to you. It's like a magnet, as opposed to saying, hey, I need to predict what's going to happen. Just having that belief that, hey, if I do the right things here, it's going to happen over time. So then you just enjoy that journey as it unfolds, as opposed to saying, hey, on August 29th, I need to be here. So, I mean, it's good you need the goal plan, right? And build those daily steps. But at the same time, you need to have that undeniable belief that Steve talks about in some of his teachings, and that's the basis of it. It's faith, right? You have to have faith in something, and then it draws it to you. And when you add that emotion to it, the emotion's the magnet. You can be like, yeah, I believe. It's that emotional feeling that your subconscious mind doesn't know if it's real or not. You're essentially tricking your subconscious mind into drawing that to you. So good stuff right there. We're exactly at an hour. We're going to wrap it up. Yeah, Tim, do you think ego has a lot to do with trying to force it? 100, well, not say 99%. If you haven't read Ego is the Enemy by Ryan Holiday, it's a great read. But ego does two things, right? Number one, it wants to protect you, make you feel good. And so, it's the one that's always trying to pull you back into the known, and then it wants to make you look good also. But yeah, ego, as Steve says, will always be fighting it. But knowing how to manage it and be cognizant of it and minimize it, to say, hey, and that's why getting your training and doing one thing and getting it to a subconscious level, you get on the chart and you're like, hey, I'm gonna take a wedge alert, I'm gonna draw it, and until the EMA, both the EMAs are crossed inside the wedge, I'm not even going to consider a trade, and then we'll go from there, whether it be at the break with a closed candle, or it be a 5-minute retrace or 10-minute retrace extreme. But until I don't get those crosses, I'm not going to do that. And so when you start out in your head, there's steps, but when you do that 100 times and you see the result, hey, when I push that button, over time, it will be a positive result. And you get to where that's just subconscious. So you look at the chart, you know exactly what you want. When you can do that, it is the program. That's the exciting part, is you can make the program that controls 95% of your life something that, and that, it just happens, but it's exactly what you want to happen. That's true power right there. So, but again, oh, good. Gary got the mind power training. So yeah, John Kehoe, You know, he's been doing it for 40 years. It's good. It's good. You know, it's same thing, packaged different way, but it's definitely worth the money. And it's he does a good job of how he presents it. And like I said, I go back through it occasionally when I stray away a little bit, but it's good stuff. All right, everybody have a good day. Next Tuesday, I will not be on I'm traveling, but I will be home Tuesday night. So Wednesday, we will have the Power 62 session. So have a good week, and we'll see you in Facebook land. If you have any 62 questions, I will be on while I'm traveling on and off. So feel free to tag me in a post if you have anything. Have a good one.